always the same, no progress. Try to start with few averages and one oscillator if you plan to use that tool. Trade with that setup for some time, at least for a few weeks. Try to optimize parameters. One more thing, read about your trading tools. What is formula behind them? How they work. Sometimes you can see screen with two or three oscillators which are basically very like each other. There is no point in that. Try to understand how your indicator works. Which strategy is right for you? There are many approaches here. Some traders prefer to follow trend on longer time for frames. Others like to open position more often. They are swing trading. Add to that possibility to trade fundamentals, to write your own trading robot or trade naked. That is a good thing, but what about best strategy for new traders? I would say that it would be a strategy that allows you to trade on higher time frames and profit on longer moves. It doesn't have to be trend following strategy. It can be always swing trading strategy. I wrote about it before, but I mention it again. Most new traders think that they must trade on lower time frames to make money. For them, these low time frames are like deep dangerous water for a new diver. This is a place where sometimes more than half of trades is done by robots. We have also high frequency trading and biggest of all, risk to overtrade. On higher time frames, there is more time to analyze current situation, to check other time frames. When you catch good move, you can make sometimes very large profit. To make money on lower time frame, you must invest with high leverage, and for new traders, high leverage is a killer. What is hitting our bets for my stochast, MST, RSI other than your USD, GBJPY, other? Please don't ask that question. There are so many different setups. Which currency has its own characteristic. Each time frame is different. Just use price history. With that, you can select the best settings of your tool. Most common mistake, invisible price action. The most important thing to remember is that all is based on price. If you add too many indicators, averages and other tools, then you may miss important price action. That is why it is good to trade on naked chart, at least from time to time. Thanks to that, you will be more aware of price movements. Pivot points, in my opinion, one of the most important tool for your trading. What is on the chart? We have few horizontal lines, pivot line, that is the middle line, R1, R2, R3, resistance line above pivot line, S1, S2, S3, support lines below pivot line. We can calculate more higher levels like S4, R4 and so on, but in practice you will need only levels 1, 2 and 3. These lines are calculated based on previous period. To be specified in formula, we can find high, low, close. Because of that, we have 1 hour pivot points calculated on high, low, close of previous hour. 4 hour pivot points calculated on high, low, close of previous 4 hours. Daily pivot points calculated on high, low, close of previous day. Weekly pivot points calculated on high, low, close of previous week. Monthly pivot lines calculated on high, low, close of previous month. Yearly pivot points calculated on high, low, close of previous year. So you can expect R lines works as resistance for price S, lines as support. Idea here is that price trend tend to move around pivot line. Even in an uptrend, after hitting a resistance, we can expect a correction down to the pivot line.